So the last week of August, we're here. How did I do? I ended in the red. You know, earlier this month, I had that big win, and it really pushed me into overconfidence. And you're gonna see that in this trade today. I trusted the 1-minute story without waiting for that higher time frame confirmation. Then when the market proved me wrong, I impulsively entered reversals like I could muscle my way back in. I'll break that down in detail and zoom out to look at August as a whole, because that earlier win, that's when that overconfidence started to kick in. It explains a lot for how I finished this month. So if we look at my equity curve here, we are below the balance, not great. We took a loss last week totaling $377. I only took the one trade on Tuesday. Having that big win that second week, and then the third week having both those losses plus this one, it's not great. We're right back to zero. We're actually below zero. It's pretty frustrating because it's hard not to beat myself up about it. I'm embarrassed. So one, I didn't even want to make this video. And two, I just thought I was above it, I guess. It's a very similar theme to last week where I thought I was above taking these emotional trades, but I'm not. So I think my expectations for myself are a little bit too high. And although I like taking reversal positions, it needs to have confirmation. That's kind of why these mistakes happened, plus the overconfidence of this big win. Okay, so pre-market expectations, the Asian range was trending, so I was expecting contraction to be seen in the AM session. The draw was higher, but I told myself maybe we get a push lower first. So around 8:30, I wanted to see price spike higher and then reverse lower towards the sell side liquidity pool for that low of day. We can see in hindsight, obviously it doesn't do that, but for now, I'm still expecting price to use this civvy as an area where we move higher, induce the buy side liquidity above these highs here, and then move lower. I'm watching how price reacts to this area here. We see we poked into it, treating it as a normal busy, and then moving higher, but we're failing to break above this high, and then we see the displacement lower. So I want to see that continued sponsorship, so I'm using that inversion civvy here for a limit, entering a stop here. So the issue with this entry is that we do not have higher time frame confirmation. We are expecting the draw higher, but we're waiting for that manipulation first. Now this in itself, this small little displacement lower here, is not enough to facilitate a short here. There's not enough confluences here. I don't even think I'm looking at intermarket at this point, but I'm looking for a short position at that CIBI anticipating sponsorship with that breakaway gap, expecting price to not break above the constant encroachment. So my limit is entered, and we break pretty aggressively through that inversion CIBI. Price reaches back into the constant encroachment. That's fine. That's normally fine anyway. But we're starting to get that retracement back into that CIBI. Now we need to see it displaced below the CIBI, basically. We want to see that sponsorship continue. This is not favorable, but it wouldn't negate the position entirely. So we don't break above. We continue to retest that breakaway gap here. So you can see I hesitate here. So my hand is on that reverse position button, but I'm not entirely sure that I want to reverse this position. I kind of hesitate. I shouldn't even be reversing. I should be negating this position entirely. But my hand is still on that reverse position here. We see price rip higher right above this relative as expected. So that's loss number one. So that's a 1-minute chart entry with no higher time frame support. Immediately when I entered, and it entered that breakaway gap and kind of meandered around there, I felt uneasy. With my hand resting on that reverse button, I didn't really want to take a long, which I don't blame myself, because right now, in the context of what I know about price, we are in a premium. So just because I'm looking for a short does not mean that I should be entering a long. I'm glad I didn't reverse, not because it would have, in this scenario, it would have been profitable here. I'm glad I didn't reverse because there's not enough conviction here. It would have been very unconfident. It would have felt like a win, but it would have been a lucky win. So at this point, I do step away for 10 minutes. So you'll see the chair is empty. And 10 minutes later, I come back and then I leave again because I expect it to contract, basically. So I sit down right around 9:27, waiting for that 9:30 equities open. As we have about 2 minutes left of 9:30, I'm looking for those relative highs to be swept. So I'm kind of just getting my rhythm back. I just sat down, basically. Price breaks lower, below this low here. This is kind of the entry I was scouting, but I was too late to really anticipate it. So basically what's going on here is 8:30 moves price higher. We see an influx of retail longs here. Price contracts to allow for retail positions to accumulate on both sides of the marketplace. We induce buy side here, and then we induce sell side here, sweeping this low. So after sweeping that low, price rips higher. I miss my entry. I get a little upset, and I'm looking for price to create an IO fed back into this gap to allow me to get my entry, basically. After sweeping these relative highs, we see a little retracement. Seeing that accumulation here, and then price dumps higher. Doesn't quite get that IO fed, but I get the entry. Whoa, slow down. I see price create that IO fed here, but we actually close aggressively lower into that inversion SIBI. That's not a great sign. I want it to wick and then continue higher. So now it's looking like it's going to attack these relative equal lows. I look at the inversion SIBI, but at this point, such a strong close here, it's most likely not going to create a low. So I end up reversing my position here, because at this point I'm like, okay, this is way too strong of a close to not attack these lows and not form that low of day as initially expected. The issue with this is the displacement here back into this gap is not enough to facilitate this as a high. So when price does in fact move higher above this high, I reverse my position again for a long to attack this high. Price does so here, but the problem with today is the low of session is not printed either. So price set the low here below that low, displaced aggressively higher to induce longs, retraced aggressively lower into this gap here, kind of wicking into the rejection block here, breaks above the highs to induce further longs, but fails to see any sponsorship above the highs. So we can see price retracing back into that immediate rebalance here and displacing aggressively lower back into that old high. At this point, there's no inefficiency here, so there's no reason for price to return back into here unless it's going to attack these relative lows. We can see price dump lower aggressively off of that old high here, just getting back into it and then reversing right back into that inversion SIBI. At this point, I just really don't want to close the trade. I don't want to be wrong. I've been wrong all session, back and forth. Swept the lows. This ended up being it for the day. If we go into our view here, we swept this low here, returned back into that inversion SIBI for the low of session before gravitating higher as expected. And then that high is here, reached at 345. So a lot of contraction here. We see the move actually start equities open, where we push higher, push lower, then push higher again. So overall, the context of my entries did not have that higher time frame support. If I would have just waited for price to sweep both these lows and took in this position, I would have had much better success here. So sticking to those higher time frames, not trying to enter every single 1 minute fluctuation, is going to keep me from making silly mistakes in the long run. If you want to see my full review for this trading session, what I do in Notion is I have a bunch of different tables. I post this all on Discord, but for this day of study, pre-market expectations, what I'm expecting at 8:30, 8:50, around that 9 o'clock macro, and I'll talk about the things that I'm feeling as I watch the VOD. I do my VOD reviews for every trade that I take, and it's super, super helpful. So I highly recommend it. If you'd like to see my notes, they'll be in the description as long as the invitation to my Discord. So let's zoom out a bit. The big win on week 2 really gave me confidence, but it's an identity trap. I started thinking that I am the trader who nails these reversals. And that bias kind of bled into the trades for the past couple weeks. After a win, it's not just greed, it's wanting to prove that a win isn't a fluke. I can see it in many aspects of my life other than trading also, where I will get overwhelmed with the confidence and the positive feelings of doing something correct and chasing that. That emotional high that you get, it's very easy to let that spiral you, especially when you're a perfectionist and one little mistake sets you off into that abyss. Before the month of August, the bullish quarterly shift did play out as I expected it to. So if I go to my review for August, we're going to see that I was correct about this quarterly shift being bullish and reaching for that 6,500 level, and that the low of month was going to form at that monthly immediate rebalance. So even though my higher time frame was correct within 10-20 pips for the high and the low of the month, just because you have these levels doesn't mean you're going to have perfectly executed trades. August's theme isn't really the red, it's more of the restraint that's necessary when everything isn't lined up, and the type of action that you take when you want something to work out because it feels good rather than it's a high probability. Moving forward for the month of September, other than the fact that we are still in the summer doldrums, we're looking for the first couple weeks to be bullish and the last couple weeks to be bearish. Again, this isn't an end-all be-all. It's kind of a roadmap. The plan is very simple. I'm going to continue scouting longs until proven otherwise. I really like this monthly consequent encroachment here. There's a lot of converging PD arrays here. Overall, that low of month makes a lot of sense to me. But I want to be very clear. This is the spot that I'm watching. So I'm going to wait for this spot to be reached or for other confluences to show me that this spot will not be reached before I'm executing positions. I'm not going to repeat August's mistakes and try to be in every single move that I see. But week 1 of September is NFP. This is the seek and destroy type profile that we would be expecting. So my bias is bullish, but I'm being cautious. The rules for next week: there are no 1-minute guesses and there's no chasing. I'm not going to press that reversal button at all. If I don't want to be in the position, I'm exiting, I'm walking away. I need to start training myself that I don't need to be in every single position, and that being right is not as important as saving my money. So overall, the levels for this week I'm watching is this consequent encroachment here below this previous day low, and then the all-time highs. As long as price is inside of this range here, I am not taking positions. I'm waiting for price to sweep this low or sweep the high. There's no guesswork there. It's very simple. If price doesn't sweep either side, then I'm flat. Overall, August really tested me. Ended up red, which is frustrating, but I know what to take into September, which is restraint. This month is about disciplined conviction, waiting for the market to tip its hand before executing, and only then stepping in. Thank you for watching. I'll see you next week.